All right, we all know that the big international banks, all that overseas exposure and trading and stuff, they've reported some difficult quarters. But the regional banks, it's another story. Just take a look at KeyCorp. K-E-Y, this is the parent of KeyBank. It roared higher today, up 7.6%. KeyCorp is a Cleveland-based regional bank with roughly 1,000 branches across the Pacific Northwest, Midwest, and Northeast. And just this morning, the company reported a strong quarter that allowed the entire financial cohort to rally, yet led the group. Key delivered a 2-cent earnings beat off a 26-cent basis with higher-than-expected revenues that rose 3.5% year-over-year. Company's net interest income actually increased by 1% in spite of the low interest rate environment, thanks to higher earnings asset levels and higher loan fees, as well as lower cost of funds. Plus, overall loans grew by 2%, with much of the strength coming at the very end of the quarter. No wonder the stock went through the roof. It was almost like it got a takeover bid. Let's dig deeper with Beth Mooney, the chair and CEO of KeyCorp, to learn more about the quarter and her company's prospects. And it's been a leader in the group. Ms. Mooney, welcome back to Mad Money.
Thank you, Jim. Glad to be back.
Well, first, Beth, congratulations on having the best quarter so far of all the regionals. I wanted to know, are we going back to 2013 when you led the whole pack?
You know, we had a strong finish to what was a good year. We were pleased with our absolute performance, and absolutely, as you said, we had some relative outperformance in this quarter. So I think it bodes well as we go into 15.
Yes. Are we out of the tyranny where all we look is the net interest margin line and decide whether someone's good and going back to growth? Because your growth was exceptional.
You know, net interest margin really does reflect a lot about the interest rate environment, liquidity, where you're getting your asset growth. So I do think a focus on are you growing revenue is probably a better indicator than margins.
All right. Now, how about efficiency? I know that you've been very strong in efficiency. Can that keep up? I mean, at a certain point, Beth, honestly, you're running a very efficient bank. How do you get even more efficient than where you are?
You know, we've talked a lot about over and above efficiency is the notion of positive operating leverage. Are you keeping your revenues growing faster than you are allowing your expenses to increase? And our beat, as you noticed, was on a revenue beat on well-controlled expenses. So that operating leverage is really critical to how you drive efficiency more than just that ratio.
Okay, I thought it was interesting that you highlighted 12% increase in commercial, financial, and agricultural loans. Who are the commercial, financial, and agricultural loan kind of customers that you're dealing with?
You know, broadly, that's a technical term on our balance sheet. It really is a proxy for our commercial customers across our community and corporate bank, which was a 12% growth, 13 consecutive quarters in that area where we've been growing. And it really helped contribute to our level of investment banking and debt placement fees. It's the virtue of the model of really being a commercially oriented bank.
Now, a lot of people at one time or another during the great downturn said that perhaps it's time for KeyCorp to break up. Maybe it's too big, this or that. I'm thinking this is time for the offensive. I saw City Nat, Russell Goldsmith, my buddy, selling his bank out to Royal Bank. I'm involved with two separate banks, and one in New Jersey and one in Pennsylvania. Both got bids within the last 2 weeks. Is it time to start buying?
It has been a very slow M&A environment, as you noticed, since the downturn in the financial crisis. So I would tell you there's still not a broad base swell of M&A activity going on. They still tend to be single-purpose or idiosyncratic sorts of deals. So I don't know that we really are seeing a return to M&A, but I do think you're starting to see banks get themselves positioned for not only good organic growth, but potentially being in position for inorganic at some point.
Yeah, I would think that because you point out several times in the conference call that the Midwest remains a very competitive area. There are other areas of this country that are now relatively unbanked or only banked by the big guys, 2 or 3 banks. Isn't that where KeyCorp could come in and become a community bank for some of these areas?
You know, our geographic diversity, which people have debated whether or not it is one of our strengths or not, I look at as absolutely a strength to be across a variety of markets and in different competitive environments, because it is true that we can come up against the big guys and be the large regional/community bank in an area and grow and expand clients. So I actually do say we could have opportunities over time across multiple markets.
One last question, Beth. I know that when we went out to do a show from the Utica Shale, we couldn't get into a hotel room, and all the planes were booked. And I just know that Utica is part of your bailiwick. How much do we really have to be worried about the oil and gas downturn in KeyCorp?
You know, the oil and gas downturn won't affect KeyCorp. Only 2% of our outstandings are in oil and gas loans, and we talked about that today in our call. So we monitor it. It's well secured, well reserved. We don't consider it an issue. But I will tell you more broadly, I see across both oil as well as the gas industry, clearly capital spending is slowing down. I think it's a net positive to our broader economy, but I see more a slowdown in investment than I see in production at this point in time. So I think the big issue is how low for how long, and that'll be what we'll have to watch over time.
Well, you're always a straight shooter with us. Once again, congratulations on almost 8% gain in one day. Beth Mooney, who's the chair and CEO of KeyCorp, thank you for coming on Mad Money.
Thank you, Jim, and thanks for your support.
Of course. Stephanie Lincoln, Action Alerts portfolio manager, we both said we're frozen on this stock because we talked about it. This is the one to buy. This is the one that I think has the most upside of the regional banks. Stick with Cramer.